Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Thursday, July the 1st, 2010, and it's time to go look at some charts. Let's check it out. Okay, everybody and their mother's, dog's, cousin's, uncle's, aunt is looking for a bounce in this market. I understand, and I'm going to tell you if you're a day trader, if you're an options trader, if you're an ETF guy or whatever, and you can't really hold through a bounce, then I understand that you'll have to do what you got to do. You know, your strategy, you understand your situation better than I do. All right. If you're going to do that, you're going to have to take your stop loss limit and lower it. Okay. Let's say it was here. You're going to take it down here, put it here. All right. And just follow whatever today's high was. You put it 1 cent above that high. And then if she turns around tomorrow and breaks out on you, okay, fine. You're out. You've made your trade, and everybody's happy. You will be happy, okay? I'm not going to do that. I'm going to hold my short. That's what I do, okay? I will add on a bounce. So I see this market's going much, much lower over the midterm, so I'm going to go ahead and hold my short regardless of any bounce that might come along the way, and I'll add to it as we bounce. Let me show you some reasons why. Obviously, I won't cover all of them, but from a fundamental perspective, the problem I have with trying to, time your way to sell here and then, okay, I'm going to get out and then it's going to bounce and then I'm going to short and then I'm going to bounce and I'm going to short. Every time I do that, I risk the odds of being wrong. I don't much care for that, so I don't want to do that. Sooner or later, if I miss something, I could miss this big move down here and I'm up here, going shoot. Or maybe I tried to go long here and I get burned right there and it just keeps going lower. So I don't really want to do it to myself. Another problem I have with trying to trade in and out of the position is this early in the game, it becomes obvious to more and more people that the market's in a downtrend. So everybody and their uncle wants to go out and short. Brokers can only short or allow you to short a percentage of the overall stock they hold long. So that pool decreases over time, and before long you start going to re-enter a short position and you get a notice, oh, we cannot let you short. We don't have available shares for that. That sucks. I've been there. I've done that, and it really wasn't a great day for me. So yeah, I'm not going to do that to myself again. And so I'm not going to do that. At the same time, like we've been pointing out, you've got this big head and shoulders pattern on all your major U.S. market charts, and that's a major sell signal there. So I see no reason to cover there. Cover as soon as she starts to break down and actually complete that trend. At the same time, let's get rid of those and do this. You'll notice that every time bulls bounce up here, bears shoot them back down. Bulls bounce, bears shoot them back down. And now we're trading below that argument line, or that whatever you want to call it. And because we're trading below there, we know that bears are very strong right here. So the idea that, oh, now we're going to bounce back up into here, I don't find a great deal of confidence in that argument. And even if we did, I know what bears are going to do to them. They're going to knock them back down. So yeah, I'm just not in the mood to be covering my shorts personally. Okay, having said that, there's going to be a lot of guys out there, myself included, that counts candlesticks. And that basically means we go 1, 2, 3, 4, 5, 6 days to the downside. Look at this 6-month chart. There's no situation where they've had 6 consecutive days to the downside. That means that the bounce is more likely. It's coming up soon. You may go down 7 days. You may go down 8, but you're already at above average conditions, so you start looking for that bounce. At the same time, they're looking at this saying, hey, look, we're no longer overbought like we were here. Now we're oversold. More reason for a bounce, right? Right. But there's another thing you should consider about that. Back here you had 1, 2, 3, 4 days to the downside. Now you've got 6. What does that tell you? Bears are getting stronger. As a downtrend develops, you'll get fewer bounces and they'll become weaker along the way. So that's important to note, all right? If you think that, okay, she's going to go down 5 days and bounce, go down 5 days and bounce, you're wrong, and you probably already know that. It's not how the market's played. And more importantly, the more bearish sentiment flows into the market, the fewer bounces you're going to have and the weaker they'll be. Pretty soon you'll have bounces that either will be just a single day or they'll be an intraday. I mean, you'll just have a day that the market, let me get rid of those, the market may just for a day bounce along and then turn right back around and shoot down, or it may intraday do that, just spike and then go right lower. So it's really tough to do that little trade in and out situation as the the downtrend develops in strength. Okay, so just my thoughts, but all in all, I'm obviously still bearish. We have unemployment data coming out for the month tomorrow morning. That's I expect to be bad, and it should be more reason for the market to go lower. Also, we told you before, whenever you've got a trend line like we had back here, and they start getting pierced, all right, they don't close below it, but their intraday activity falls below that line, it's a preemptive sign that it's about to break down. Well, now we've got a trend line here, the neckline of this head and shoulders pattern, and this low point, okay, and what happened today? We closed above it, but we intraday pierced below it. So we know the market's going lower, okay? Last but not least, we can look and see what smart money is doing. Smart money is smart. They have a lot of money. People say, man, you know what you're doing. Take our money and do something with it. And whenever they move, you can see what they're doing because of the volume. All right, whenever they move that money, it will show up. And you see smart money is shorting, and shorting, shorting, shorting. Nobody's buying. Only dumb money's buying. So I see no reason at all to cover my shorts. Quick look at the gold chart here, 6 month, each one of these candles is a day. We had a stop loss limit right below the 50-day moving average, I believe, and boom, you're out, okay? If you were in that, you're no longer supposed to be. Quick glance at the Hang Seng, you can notice we got the high points are consecutively lower, the low points consecutively lower. She's in a confirmed downtrend, would be shorting this guy, obviously, and she's still not even nowhere near the bounce line, which would be down here somewhere, so I would just keep shorting this guy. The FTSE, bull market for sure. Absolutely not. There's nothing bullish about this chart whatsoever. And yeah, like we told you yesterday, this inverted hammer telling you she's going to go lower. Well, she decided to do it today. So she's gone lower. Yes, she is also showing now oversold on short term. And she could bounce, but this is not a, let me get rid of that so you can see it. This is not a hammer candlestick formation, and I don't like it whatsoever. For a bull perspective, I would just short it. The NASDAQ, we've been talking about this for a while, telling you that these bottom points here were all fake. She was going to break below this point. Today she did that intraday, but she did not close below that point. What does that tell us? Let's have a look real quick. We've got a support or trend line right there at that level, and that is telling us a pierce is what comes before the, the breakdown. So even if she bounced up or whatever, the end result is going to be lower. See, lots of reasons to be a bear in this market and very few reasons to be a bull. Quick look at the VIX. You'll notice we got an inverted hammer here, but it was on a higher high from this one. That's still very bullish for the midterm, or I should say bearish for the overall market because the VIX runs the opposite of the overall market. But all in all, this is a potential here for a fill of this gap down here. You could actually sell off for a couple of days, whatnot. If the overall market bounces, you will see the VIX reverse course. So keep that in mind. And anything that is, you might be trading the VIX based on any ETF that's out there, basically just advance your stop loss limit, and that way it locks in the gain no matter what. If she pulls back on you, find another opportunity to get back into it or something else, all right? Awesome. Couple of announcements to make. If you've not been to our free website at perfectstockalert.com, 100% free. All we ask in return is you refer a friend. It's that simple. Very awesome. Also, we have a live trading course that will begin next week on Tuesday, the first day back into the markets. If you're interested in that, go to our website, check that out. Pretty awesome there. Also, we have a new blog there that has a good information that we really can't do in video very well. It requires more writing than chit chat. So check that out as well. Okay, awesome. Let's have a look at our disclaimer. The disclaimer. Awesome. You can read while I talk. I'd like to thank everybody for their support of this free service. Thank you for referring your friends. Thank you for subscribing to our YouTube channel. And thank you for visiting our website. That's all important information there and all very important that you show your support that way. It helps us stay free. Okay? Awesome. Keep in mind the unemployment data that's due out tomorrow morning. I expect that to be bad, and that would actually be a kick to the market. So keep that in mind. And you've got a 3-day weekend coming up. So yeah. All right. You know everything I know. God bless. Enjoy your evening. I'll see you all tomorrow.